From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. For this, the 23rd of March, I'm Nadine Blaney.
I'm Kyle Rodder. It's great to have your company. What a day it has been. We were looking forward to it, and I think it kind of delivered, I suppose, in terms of, well, a little bit of excitement.
Well, a little bit of excitement. Kyle, how are you?
Tired.
Yeah, all right. Well, does feel like that he was up so early to be, listening and reacting to that Fed meeting, which really has dominated the day, I think, to Kyle's point. Look, it was a worse picture. I mean, this is not a pretty picture that we're about to show you. The CBOE Australia Index has closed, and it's closed down by 0.7%. But look, it was worse earlier on, if you can say that. Off the lows of the day, the final match out still going on with the S&P ASX 200. The small end of the market was really battered and bruised. We'll go through some of those companies a little bit later on, but the small ords, for example, off by 1.25%. Is there anything that we can sort of positively take away from this session, Kyle, when you just look at the chart on screen?
Well, we're off the lows of the day, if nothing else, and US futures have picked up. I think market participants are going to have trouble digesting this for a couple of days, because if you were up and watching the actual press conference, the Nasdaq was up 1.5%. That's when I closed my short in the market at a loss. But very, very quickly turned around when Powell ruled out the prospect of rate cuts before the end of the year, which is still baked into the futures curve. And then we obviously also had those Yellen comments too. So overwhelming for market participants this morning. So I think we're going to have a few days to try and work out what this actually means.
Yeah, we had a chat with Ira Epstein from Linen Associates early in the day, and he was saying it, in his view, it wasn't actually the Fed, because they did say that they could pause. They did say that they could continue to hike, but what we do know is that the Fed will keep rates at an elevated level for perhaps a longer period of time, if you believe the dot plots. But Ira was putting down the sell-off and the volatility to those Yellen comments, because Jay Powell was saying that, the banks should be supported and that they were in favor of some sort of a review of what went on, and seemingly lent his support behind bank deposit guarantees. But then Yellen came out and threw cold water on it. So again, that uncertainty, and every guest that I speak with, not every guest, but that we have the conversation says, and it makes sense, right? Your bank deposits should be guaranteed. Corporates' bank deposits should be guaranteed. It could be quite chaotic if they're not. And we'll obviously continue to see funds going to some of those bigger, more established banks, which then, snowballs into problems for those U.S. regional banks. So a couple interviews online you can listen to in that regard. You can listen to the interview that I did with Mark Bailey from Capstream Capital, Martin Wetton from Commonwealth Bank. Two really good interviews, and they actually see things quite differently. If you wanted to get two sort of different views on where the U.S. is headed, whether or not the banking crisis is over. Some say it's old news, some not.
Yeah, no, I seem to be getting that kind of a message too. Actually, I spoke to Joseph Wang, who was I spoke about on the show yesterday. Very excited about.
Oh, yeah.
He used to work at the Fed, and he said that things are reasonably well contained. He's not too concerned about the whole situation when it comes to broader systemic risk. But one thing that I think I've gathered from speaking to people today in particular is that regulators need to step up to the plate a little bit and manage these regional banks a little bit better. But he said in terms of broader systemic risks, any sort of institutions falling over or anything of that nature, a fairly low risk for the time being. But it will have a very big impact on credit creation in the economy, which will slow down growth in the medium to longer term. So Jay Powell spoke about it last night. It's going to be an impact to the real economy.
Okay, so that interview is online. It's The Big Picture, ausbiz.com.au, if you're listening to this now. So the three themes today, look, it was the ASX melting. Obviously the Fed, which will be intertwined into conversations for quite some time. And gold. Gold, if you're looking for a sector that did outperform. Actually, speaking of the sectors, let's run through how these sectors performed today. And we had the miners really weighing on the market overall. Fortescue Metals in particular there, Kyle.
Yeah, interesting one there, down 3.2%. We did see a little bit of a pick up in iron ore futures
Yeah.
today in the region. But overall commodity plays, other than gold, obviously, underperforming. Newcrest Mining, as you can see, they're up by 1.1%. Some of the other tech sectors, though, the tech space, and I referenced the NASDAQ before because, again, it initially responded reasonably well to that notion of a potential pause from the Fed. While that finished lower last night, quite considerably too, seemed to rub off somewhat on our tech sector. And, well, if you like to play this one at home, block off by 5.79%.
Well, you
Bitcoin,
get whiplash if you're playing this game at home.
Well, exactly, especially when it comes to exposure to the crypto price because, Bitcoin price because it was down below $28,000 again last night.
Energy. Look, there was not a lot of good news here in the energy space locally, but Washington H. Soul Pattinson did come through, up by about 1.5%. And on that, well, we'll get to it when we review some of the corporate stories today. But yeah, we don't want to just be too negative. So there's your picture when it comes to gold. Also, the telcos, last I checked at least, would finish just mildly into positive territory. All right, let's get to some of those top corporate stories. I just like dancing here. And lithium, this is a theme that'll come up with our featured guest in a bit. But we heard Core Lithium expanding its sales deal with China's Sichuanyua today.
Yes, and BHP engineering firm Hatch is going to design electric smelting plants in Australia.
Just showing the way that things are going in metals and mining. I mean, hopefully making a difference in terms of emissions. United Malt Group, actually that was one of the best performers today, up by more than 6%. A commissioning, cheers to this, of its new Inverness malting facility in Scotland. I'd love to visit Scotland. Have you been?
I've never been, but I had an ex-girlfriend that was Scottish, and well, she was rather nice.
No, that's good.
Yeah.
Wow.
And also interesting, we had a conversation about wheat prices today too. We don't do that every day, but also a potential tailwind for the business. They're coming down quite considerably.
Really? Okay, yeah. Jonathan Barrett from Celsius Pro, I know was on earlier. You can find that online, and he details the gold and silver price and his view on copper as well. Sigma Healthcare, so that was a company that reported, obviously out of cycle. It's going to be paying a final dividend it plans of 0.5 cent per share, fully franked, after it posted a net profit of 1.8 million. So that's a big turnaround from a loss of 7.2 million last financial year. And that was our stock of the day.
Even when we go back about 5 years ago, they were, we could see their earnings were up and down, and so was their share price. I mean, it got as high as about $1.50 back in 2016, and the share price was already collapsing before COVID even turned up. So, that sort of earnings variability makes it a tough investment proposition. I mean, good to see they're now profitable. I mean, margins have always been an issue with this business. So, judging by the market reaction, it wasn't a good enough swing, unfortunately. So, as I mentioned earlier, I just think it's a tough business to invest in because of that variability of their earnings over time.
Yeah, it's not, as I said, it's not really a healthcare stock. I think there's far better retailers out there, and there's far better healthcare stocks out there.
Oh, Mark Gardner there from Macro Capital. Apologies. That was Michael
Gable.
Michael Gable from Fairmont Equities.
He's a
Thank
good friend
God
of
you're
mine.
here. I had Henry Jennings on the mind because he is joining us. He is joining us right now to talk about the day that was. Henry, how could I mess that up? So what do you think? I mean, what do you think as an Australian investor about what we learned from the Fed? There was so much anticipation. We still have the BOE tonight to get through. Does this make you change any of your thinking about long-term holdings? Henry, I think you're might be on mute. Is it on our end? Should we sing a song while we wait for Henry Jennings?
Maybe something from The Cure.
Yeah. Well, maybe we'll come back to Henry in just a moment. Maybe something from The Cure. So Henry's in a band, I'm sure you've heard.
Yes.
And I love The Cure. And he can cover The Cure.
Dean follows him around the stage.
Yeah.
It's a long story.
That sounds really bad. All right, let's find out what's happening overnight. And the Bank of England. So we're not quite through these central banks. And there was a spanner thrown in the work last night, wasn't there, for the good old BOE, with inflation rising more than expected. But most of the commentary I heard and read today would be that the Bank of England may not be spooked by that because they are expecting inflation to come down in time. But yeah, I mean, every meeting for all these central bankers are live. They do not want to see inflation become entrenched. I mean, that's public enemy number one in their view.
Absolutely, and we haven't spoken about it as much over the last few weeks because everyone's talking about banking crisis, but that whole notion of not letting inflation expectations become unanchored. And well, in terms of what I can see here, the expectation is for the Bank of England to hike rates to 4.25%. So wasn't necessarily shifted on the basis of that inflation number last night, but certainly reaffirms the need of, well, continued policy tightening perhaps in the UK. Obviously, a far more difficult set of circumstances for them because their growth picture is also a little bit more negative than other parts of the world.
Yeah, we do have in the Eurozone, a consumer confidence read. So we're expected to see the consumer confidence to work against inflation and interest rate pressures in March. Then we get a couple of these Fed activity indices coming through in the United States. We're expecting the Chicago Fed national activity to moderate in February after an unexpected bounce that we saw coming through last month. New home sales, the housing market in the States is always of much interest. It's the recession bellwether, or signal. But some of the data coming through from the housing market there hasn't been too poor, And then we get to jobless claims, because if you've got a Fed that's focused on inflation and unemployment, I mean, the jobs market is still so strong.
Absolutely, and one that we probably wouldn't normally make note of because of, well, it's not as significant to us, but we actually do have the Swiss National Bank meeting tonight too, which won't necessarily be as important because it is expected to raise rates by 50 basis points, but naturally, well, it's been in the news over the last week or so for being a part of the crack team trying to coordinate the takeover or merger, whatever you wish to call it, of UBS and Credit Suisse, and well, obviously more or less providing backstops for these institutions amid stress in the European banking system. So another one to watch this evening.
Okay, so not big corporate news on the agenda, at least for tomorrow. You never know what will happen in terms of breaking news, but we do have Eagers Automotive holding its AGM. We've got Buru Energy with its half-year report out, and Resap as well with its half-yearly report. So there's a couple of the companies that we'll be keeping our eyes on. Let's go back to our featured guest, Henry Jennings. He's joining us from Marcus Today. Do we have you now, Henry? Good afternoon to you.
Hi, Nadine. I hope you have me now, do you?
Yeah, we do. Hey, Henry, the question was simple. So rates are still rising. They'll likely remain higher for longer now.
Yeah.
Do you change anything in your strategy?
Not really, I have to say, Nadine. And we've seen these knee-jerk reactions where Wall Street throws the dummy out of the stroller before, I have to say. So we're waiting to see what happens, I guess, tonight, because we do get these sort of one-day wonders. At the end of the day, I think, Federal Chief Powell was relatively clear. We are going to see a little bit higher in interest rates, maybe 25 basis points, but there will be a pause. There are no cuts coming. You can't see an occasion where we should get any cuts. The US inflationary environment is still very, very strong, although it is coming down. The economy there is still relatively strong, and the banks are very sound. So I'm not really sure we should be getting too panicked just at the moment. I don't think the US banking crisis, if that's what you call it, some mismanaged banks like SVB and First Republic is hardly a crisis. It's certainly not the same sort of crisis that we saw 15 years ago. And our banking sector very strong and very robust. So I think this too will pass, and will be focused on what the RBA is going to do in April as opposed to what the Fed has done and what we'll do in the coming months. But 25 basis points away from the end point, I really don't think that's, you're starting to get down to the fine detail here. I don't think that's going to really affect us, although the market is still very nervous.
Henry, your attitude just towards the banks in general, I mean, I don't know if you're one that likes to invest in them. Sometimes it can be a divisive point whether, you put your money there at all. But, I mean, obviously there's been a level of guilt by association with the Australian banks, even though it's sort of largely considered we're going to be insulated from these issues overseas. Do you start thinking that given the sell-off, there's some value there in any of the banks if you do sort of tilt towards liking investing in them, or is it at the moment, given the macroeconomic backdrop, some more water to sort of pass under the bridge until we can say that they are, a decent opportunity?
Well, I've got to say, Carl, the Aussie banks were under pressure for various reasons before we got this banking crisis. We are seeing increased competition in the mortgage market, so those net interest margins have been a little bit squished, shall we say. We are seeing more competition in the deposit base as well, and banks are politically being forced a little bit at least to push up those deposit rates, which they've been a little tardy in doing. So that is going to squish their margins as well. And of course, there is that wonderful fixed interest cliff coming where all those 2-3 year fixed interest loans tend to roll off, and that will put pressure on them. But it's in the bank's interest and in the customer's interest to manage that. These guys make $30 billion between the four of them. Come rain, come shine, they pay out big dividends. We've got results coming up in March. We've got dividends to be paid as well. Sorry, results in May rather. Dividends to be paid. So there's a lot to kind of like. They're not going to shoot the lights out in this kind of environment. But, the time to buy banks is when everybody hates them. And the time to sell them is when everybody's falling in love with them, as they were not so long ago, just when Commonwealth Bank came out, was all-time highs. And the rest of the banks have been dragged up in its wake. So I don't think it's time to go all in, but certainly if you're a long-term investor looking for good income, our banks are pretty strong, pretty secure, and they do make an awful lot of money.
Hey, Henry, you play in the small cap end quite a bit as well. Look, it's been tough. It's been very difficult, but I had a couple of
horrible.
It has been, yeah, okay. That's why, battered and bruised sort of comes to mind, not in relation to how you look, of course, but, it has been.
Yeah.
I had a couple really good conversations today, though, with small cap investors. And, they all say that when you have these market inflections, when you have these real change in regimes, that is when the real opportunities come to the fore. You have to still obviously know what you're doing, do your research, but are you thinking that you can start getting more active if we now have a little bit of a clarity around where, interest rates will peak?
The problem with small caps, Nadine, is it's not really so much a function of interest rates. It's more a derivative of confidence and sentiment. And confidence and sentiment in the market generally is very much on the nose at the moment in the small cap end of things. I mean, there's certainly some that have been going extraordinarily well still, but in the small end, it is all about confidence. And the interest rate talk and the whole macro thing saps people's confidence in the large caps. And if you're getting sapped in the large caps, you're not going to want to play in the small caps. There will come a time, I don't know when, but there will come a time. But you may need to gird your loins. You may need to take to pluck up your courage to get stuck into the small caps. I don't think it is yet. I'm still got a very large cash holding in my small cap portfolio, which I have of around 46-47%, and that has been the way of things for some time. So I'm not rushing in, and I'm looking at opportunities to pick off, but it's you've got to take a longer term view sometimes. But I think it's a little early just yet to be looking at being very, very brave in the small caps.
Got to ask about lithium, of course. I mean,
yeah.
I wanted to know why it's having the troubles that it has over the last few weeks. I mean, I just sort of speculated that given the fact the broader energy space has kind of struggled, that maybe it's just a derivative of that. What's the story behind lithium stocks right now?
Oh, I think, Carl, it is the ultimate sentiment sector. Let's face it, 2022 was the year of lithium. People were making extraordinary piles of money. The price of lithium carbonate was going through the roof. But what we have seen is just a sort of a Chinese water torture, if you like, a drip feed of negative news from the price obviously falling quite substantially to demand in China of electric vehicles tempering slightly. We're also seeing stories about substitution in terms of batteries, sodium-ion batteries instead of lithium-ion batteries. And we're just seeing a lot of sort of negative news. It's not one thing, it's just lots and lots of things piling up. And the easiest way, the path of least resistance, is to sell these stocks down. And it's not difficult to do when sentiment is against them. They are very volatile. They have been moving around an awful lot. But when the price of the underlying asset, being the lithium carbonate, is falling and all the other derivatives of lithium are falling, and Chinese demand seems to be tempering in EVs, it's an easy story to sell if you're a bear.
Henry, really appreciate it. Thank you so much for jumping on. Hopefully we can do it again maybe next week. Henry Jennings there from Marcus Today. Thanks for your time.
Thanks, guys.
Bye. Well, let's take a look at some of these market leaders. We're in a good mood here today. And so why not start with the positive? United Malt Group, well, we heard, got a broker upgrade, and it opened that that site in Inverness in Scotland. So that's nice news there. Resolute Mining. Look, I would dare say that this is just a reflection of the strength that we've been seeing in gold there.
Yeah, absolutely. And a good one to put in there too, Brickworks. We actually had a chat to the managing director today. A really interesting story and helped sort of actually challenge my sort of preconceptions about the business and what it does. Obviously, I don't follow it particularly closely, but just talking about the tailwinds from industrial real estate and how that's benefited the company. And, you know, they expect actually a pretty good 6 months to come. So up 3% today, obviously, on that news.
Lindsay Partridge, he joins us often in the wake of results. And I remember he was the first person, even when house prices were soaring, everybody was building, lots of stimulus. And he said, nah, there's pain because the margins are so thin. He was the first person that put on my radar that you will see a lot of these smaller developers and builders go under, and lo and behold, you know, his thoughts really came to fruition there. GUD Holdings, I'm not seeing any news associated with it, but I will say that I've been told that sometimes boring is beautiful in really volatile times, and that's I don't want to cast aspersions, but maybe that's where some of this is coming through for GUD Holdings. You know, industrials, I had a chat with Evan Lucas from InvestSmart today, and he said industrials are one area of the market that you might want to, you know, hide out in, for lack of a better term. Brambles was actually doing well earlier in the session today. So just some of those slow, steady, you know, nothing flashy, but still demand for the service and the business that they provide.
Yeah, I think folks call that quality out there. Let's get to look at the laggards now. Polynoval down by 11.2%. And I don't know if you know if there's any news there in particular on Polynoval.
Look, no, I see a bit of a change in directors' interest notices coming to the market, but not really, although it definitely is, you know, by far the laggard on the market today. So
yeah,
there you
can't see
go.
anything jumping out to me there, but of course Megaport always a volatile 1-2, off by 8%. Champion Iron down 5.83%. Nanosonics, after actually trading fairly strongly last week, pulling back just a little bit, and Pilbara as well.
Premier Investments, sorry Kyle, sorry, I'm getting excited. I don't know why, but it eased by close to 4%, so it had a downgrade coming through from Fortescue Metals. So look, it's not really busy, let's be honest, when it comes to some of the company news at this time. But Kyle, it's hard to believe that we're only about 3 weeks away from quarterlies in the US picking up again.
Yeah,
so
and
get ready for that.
That's the lion's share of it too, because normally we get Nike in the next week or so, and there's a few other names to sort of ease us into things. So yeah, it's going to go back to company fundamentals, US corporate fundamentals once again. And in fact, a lot of the folks we've been talking to the next 2 or 3 days are really, especially obviously the stock guys and gals, really looking forward to that because they want to get back to the fundamentals.
Yeah, all right, here are some of the small cap, mid cap leaders and laggards. So we've got Panoramic Resources. Boy, I'll look into that one, up by close to 21%. Fonterra, they're breaking that clear bias on this page to some of those in the resources industries. But there is always a flip side to that. And OFX did update the market today, bit of an investor presentation and trading update. Flagged a bit of problems in one of its segments, even despite all of the volatility that we've seen in FX markets. So just keeping an eye on OFX. I do believe that it too reports out of cycle and does so sort of towards the end of May.
Okay, so that was the day that was. Another interesting one. I dare say it won't be as significant tonight, but Bank of England, SMB, a few other things to keep an eye out for as we still digest the Fed too. Plenty to talk about tomorrow morning.
And it's Friday tomorrow, by the way. I have yet to meet a Friday that I don't like. We'll see what happens on these markets overnight. Asian markets, you know, very subdued in the wake of that Fed decision, and just checking in on US futures as we record, obviously. And yeah, they were pretty flat through much of the day, mildly positive. And of course, how the US market goes is often how our local market goes, but we'll be getting plenty of analysis. Andrew Ticehurst comes to mind. He's joining us from Nomura. We'll also be speaking to LGT Crestone at 10 o'clock, and you know, a regular host of, as you put them, stock lovers?
Stock lovers? Well,
stock lovers?
Yeah, we'll call them stock lovers.
Okay. Analysts, we are too.
Of course. All right. Well, make sure to catch up on everything today on the website and app. Plenty of great content from the day. Well, until tomorrow morning, have a great evening.
See ya.